For more on Amazon, let's bring in Gil Luria of D.A. Davidson and Maxim Group's Tom Forte. Great to have you both here. Gil, I'll start with you. Your initial reaction, especially when we saw so many of the key metrics come in better than expected, starting with perhaps AWS.
That's by far the most important number here. Not only is that 17% a lot better than expected, it's more acceleration than Azure and GCP had last week. I can't overemphasize that. They're accelerating faster than Google and Microsoft, who are always in the AI debate. That makes it look like AWS is now catching up on AI and perhaps in a position to lead. Let's not forget their business is a lot bigger than Azure and GCP. Their foundation is from chips to the SageMaker foundation model to Bedrock facilitating other models to Amazon Q, which they announced today, which does a lot of things for enterprise that every other software company is trying. And now Amazon is telling them, no, don't worry about it. We're going to do this for the enterprise. So that's a very important result. Everything else almost pales in comparison.
As you saw in the video, Amazon's AWS is strategically positioning Amazon to become one of the top AI winners, and this claim can actually be backed up by the numbers we have seen in Tuesday's 2024 Q1 earnings reports. But Amazon's AI ambitions go beyond this. Recently, the company officially launched Amazon Q, which it previewed at its 2023 AWS reInvent conference. Amazon Q is Amazon's generative AI-powered assistant, which is used to enhance software development and streamline access to company data. In today's video, we will go over Amazon's generative AI assistant and what it can bring to the table. Additionally, we will discuss the impressive AWS, which is, undoubtedly, Amazon's golden ticket to leading the AI market. But before we do that, if you want to keep up with Amazon's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Tom, what to make of the broader profitability picture? And I ask that knowing we got those North American margins that came in stronger than expected. And as Adam Christofouli was telling us, that's such a key metric to look at. Free cash flow also improving, more than $50 billion there. And then the high margin advertising business coming in strong too, at a time where we know Amazon and all of its peers in the mega cap space are pouring so much money into generative AI and these new AI applications. The fact that they are coming in with better profit numbers tells us what?
It tells us that Andy Jassy's emphasis of services for Amazon is working. And when you couple that with his very aggressive expense management, you're seeing these impressive margins. So in addition to Gil's comments on the strength of AWS, you saw the strength of advertising, and you're seeing the benefits for North American retail of the aggressive cost-cutting moves by Andy Jassy. So I think that that's what you're seeing across the board, an emphasis on higher margin services and aggressive expense management, resulting in very impressive margins and profitability for Amazon.
Amazon's new generative AI-powered assistant allows users to perform multiple tasks, and here are a few to name: generate codes, debug plans, and execute tasks efficiently, all with the help of AI. Of course, this contributes to boosting overall productivity. Amazon Q works by connecting to enterprise data repositories to provide information on various business aspects, making it a robust tool for developers and business users. The launch includes two specific versions, which are Amazon Q Developer and Amazon Q Business. The first one assists developers by automating tasks such as writing and suggesting code, testing, bug fixes, which normally takes a lot of time to figure out, and finally upgrading applications, saving developers a huge amount of time. It is an important tool because it integrates with Amazon's cloud services, which allows developers to easily manage infrastructure, troubleshoot errors, optimize operating costs, and ensure application security. Therefore, it lets developers spend less time on routine tasks and more on creating unique user experiences and faster deployment. On the other hand, Amazon Q Business is a large language model-powered assistant that enhances the productivity of businesses by allowing AI to leverage internal company data. Therefore, employees will be allowed to access and interact with enterprise data repositories to answer questions, analyze trends, and generate content related to company policies, product information, business results, and other professional topics. Additionally, Amazon introduced Amazon Q Apps, which extends Amazon Q Business. This one allows customers to create AI-driven applications through simple natural language commands without needing any coding expertise. This capability lets any employee build tools that best fit their liking to improve their daily workflow. With that being said, there is no doubt that Amazon Q offerings are a huge step forward in how businesses can leverage generative artificial intelligence to enhance productivity, streamline processes, and support decision-making. Now, let's talk about AWS more broadly, because it's certainly one of the main factors defining Amazon right now, and it will be a game changer for Amazon's revenue this year and in the future. Hello everyone, and welcome back to Investocracy.
We've already seen strength in Microsoft and Alphabet. It looks like the third head of the cloud effectively is going to also be appreciated this afternoon. They said their outlook for the next quarter, 2Q sales, will be between 144 billion to 149, with an estimate of 150 billion. That is a round miss with a range coming up shy, but market seems to be okay with it. AWS growth rate now expected to be at $100 billion annual revenue run rate, so always nice to have some cash on hand, Caroline.
Yes, certainly the case. So you were talking about the outlook. I'm just running through the last quarter results. So sales of $143.3 billion. That came in higher than Wall Street's estimates of 142.53. So that was, Wall Street was expecting about a 12% increase. Amazon ended up with a 13% increase. The real key number to watch was AWS in terms of their revenue growth. The expectation was for around 15% at $24.1 billion. Looks like that came in at 17% to $25 billion. So there was a lot of talk that even 15% might actually disappoint Wall Street. So the fact that they're coming in at 17% year-over-year growth for AWS could be good news for Amazon stock. I initially saw some losses when I first started seeing these numbers come out, but now I'm seeing shares turn around in the aftermarket. Well, in terms of
I think they really
EPS,
like the margin. I was just going to point this out real quick. They beat big on their margin. Operating margin of 10.7% was up from 3.7% a year ago. Analysts were only looking for 7.6, so another year of efficiency. Go ahead, Caroline, finish your thought.
I was just going to run through. I'm only seeing a GAAP EPS right now, which my estimate is for 82 cents, but that would be adjusted. So I still am looking for that. But just Q1 product sales, $60 billion. Service sales, $82.4 billion. Service sales at $82.4 billion. But really, the key number that I was looking for, obviously you mentioned the margins too, but was that AWS revenue growth, and that definitely is coming in better than expected.
Amazon's cloud computing business, AWS, saw a magnificent 17% growth year-on-year in this year's quarter one, which beat analysts' expectations of 15% growth. This number assures us that AWS is on track to earn $100 billion of revenue in full year 2024. However, you might say that 15% isn't enough compared to Amazon's cloud competitors like Microsoft and Google, as they reported cloud growth of 31% and 28% respectively. Well, to address your concerns, Amazon's CEO, Andy Jassy, has put it best when he said that it's useful to remember that year-over-year percentages are only relevant relative to the total base from which you start, and given Amazon's much larger infrastructure cloud computing base at this growth rate, we see more absolute dollar growth again quarter over quarter in AWS than we can see elsewhere. This means that AWS still has much more room to grow, and we will see these numbers skyrocketing in the upcoming earnings. Additionally, Amazon is spending billions of dollars to improve their AI infrastructure to deliver new AI products, and their spending is surging as demand for AI now is stronger than ever.
Tech giants are now pushing the boom in AI investing, with Microsoft, Alphabet, and Meta all outlining plans to spend tens of billions a quarter to develop AI products. Just how much should we be expecting from Amazon? Deirdre Bose is looking at that ahead of earnings tonight for today's Tech Check. Hey, Dee.
Hey, good morning, Carl. So the monetization of AI, we know that's still not clear, but the costs are increasingly clear, and they are steep, putting us in a cloud CapEx supercycle. Take a look at this chart. It shows CapEx spending and forecasts among the biggest players, ex-Amazon, which reports tonight. For 2024, spend was expected to grow 26% collectively. That's the orange part of the line you see on your screen. But now that has been revised up to 44% growth, the yellow line getting closer to the last supercycle around 2018. Now, back then, the cloud wars took place around pricing and specialized services. Today, it is around what Jensen Huang calls the AI computing ramp. That's servers and GPUs, everything needed to scale the technical infrastructure needed to meet growing demand for AI products and power any number of large language models that the hyperscalers are offering. Now, put in absolute terms, the number is staggering. Microsoft, Google, Meta, Amazon, Apple, they could be spending north of $200 billion in CapEx this year, according to Goldman Sachs. For the most part, Wall Street has been willing to accept these rising costs. But Meta showed us last week that investors, they can still be spooked. And when you overlay revenue growth, the blue line on your screen right now, on top of spiking CapEx, the picture is not pretty. Again, this is ex-Amazon, and it shows you that collective revenue is forecast to rise just 3 percentage points from last year, versus CapEx that is expected to move up more than 40 percentage points in the same time frame. So that spending is far, far outpacing revenue growth. As for Amazon tonight, guys, expect higher CapEx as well. No surprise there. The key question, though, will the street see it as a positive, or will they receive it more like a Meta and sell on that news? A dividend could certainly cushion the blow of higher spending like it did for Google, but even without a dividend or a buyback for that matter, Amazon has neither. Amazon under Andy Jassy is a lot more profitable than it's ever been, and so the case for a capital return program is only increasing as it spends more to keep up with the other hyperscalers.
As you saw in the video, Amazon will consistently grow and become more profitable under Jassy's leadership. On top of that, seeing how much revenue AWS produced alone, this reassures me that Amazon is indeed going all in when it comes to AI, and with the Amazon Q announcement, we can see how Amazon's AI game is really evolving. Additionally, it was not just AWS who surpassed expectations with its revenue. Amazon's advertising unit saw a surge of 24%, and this is the first report since Amazon started running ads in its Prime Video back in January, which is a move that analysts predict could generate significant revenue over time. In fact, advertising revenue was $11.8 billion in Q1 compared to $9.5 billion a year earlier, which shows that analysts' prediction is indeed becoming a reality. And as Amazon continues to maintain growth in profitable segments like AWS and advertising, many analysts start building an upbeat perspective on the company's prospects for the rest of 2024 and beyond. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Gil, do we have to revisit the narratives here? And I hate how stock price moves can sometimes end up equaling truth for people, at least for a period of time. But the narrative for a little more than a year has been Amazon's behind in AI because, in part, Microsoft's partnered up with OpenAI, et cetera. Google was supposed to be behind, too, but now people don't think that anymore because the stock went up. OK, Amazon seems to have intentionally released Q on the same day as earnings, perhaps driving home something about the cloud growth and the AI strategy behind it. So what should investors take away from that?
Yeah, that's exactly right, that they may not have been as ahead of the game as Microsoft was. Let's not forget, Microsoft was well ahead of the game. GitHub Copilot came out in July 2021. We didn't even know about ChatGPT back then. Microsoft did an incredible job of capturing that value and continuing to run with a lead. But Amazon stepped back last year and said, well, what do we want to do? We want to build a whole infrastructure for our enterprise customers. We're not going to be as worried about consumers and consumer applications. We're going to develop the whole infrastructure so our existing AWS customers can execute on what they want to do with generative AI. And that's what we're seeing today. And let's not forget another very important piece that we can now piece together between the three results. It's not just AI that's driving acceleration for the hyperscalers. Both Microsoft, Google, and now Amazon have accelerating growth beyond the contribution of AI. For Microsoft, it was 2 points of acceleration excluding AI. For Google, it was the same. And I would imagine that a jump from 13% to 17% growth for AWS, which again is a $100 billion business, has to do with enterprise spending on cloud easing up.
Right.
That's good news for Amazon. It's good news for the rest of the market as well.
Amazon stock took a dip after earnings were reported, but that was probably thanks to investors taking profit after the stock went up around 3% thanks to the company beating analysts' expectations. So, it's no surprise that Wall Street analysts are still bullish on Amazon stock. For instance, Bank of America analyst Justin Post had a buy rating and raised the price target from $204 to $210. Meanwhile, Mizuho analyst James Lee had a buy rating and raised the price target from $230 to $240, and Goldman Sachs analyst Eric Sheridan had a buy rating and raised the price target from $220 to $225. The Goldman Sachs analyst added that Amazon executives seem pretty confident they can keep growing the business while making more money at the same time, and that Amazon has got to keep finding ways to boost profits and cut costs with their global stores, a potential that Goldman Sachs believes to be underappreciated. Basically, the Goldman team is still super bullish on Amazon's ability to make bank both in the US and overseas. They think the company's got room to grow profits while still investing heavily in expansion, even if some investors are worried about Amazon spreading itself too thin. For investors, Amazon represents an appealing long-term opportunity, especially as AI transforms businesses and the cloud computing market expands. The company's competitive advantages, visionary leadership, and focus on innovation should enable Amazon to capitalize on the rise of AI. While risks always exist, Amazon has the pieces in place to maintain and build on its industry leadership in the years ahead. But what do you think about Amazon stock? And what are your expectations for AWS's future? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Amazon is. If you would like to know more about the latest updates about companies like Amazon, then go ahead and click on the next video on your screen. See you there.